Well, that was one heck of a round trip trading session all the way back down there to the lows of the day. Is the market rally over? Is it going to continue? This is the Stock Market Brief Show. Make sure to hit that thumbs up if you haven't done so already. We're getting right into it today. This is actually looking at Bookmap. And the reason why I'm showing you this is because Bookmap allows to paint level 2 data onto the screen. If you don't know what that is, it allows you to see the order book, which means that if you're just looking at a regular candlestick chart, you don't get to see what orders hide behind all those candles. And with Bookmap, it paints it on the screen. Now, here on ES, we had about 5:30 a.m. this morning have this huge order come in at 39.25, but price took off right here at 6:30 and just kept on running. But the orders remained here, and sometimes these can act like magnets. And as you can see, price throughout the day finally got under that daily VWAP here and then started moving towards that low. Now, if I zoom in a little bit, you can see a little bit more closer as the market's trying to break down through these levels here. And then eventually, yes, it did come and fill and absorb that liquidity. Okay, and where did we close out? Well, we closed slightly beneath that level. What I like to point out here going into tomorrow is that 39.60 because that came in after the close, so that could be an interesting level to watch going into tomorrow's trading session. They're at 39.60. So is this telling us that the rally is over, or is it just perhaps just a little bit of a breather? Well, what caused the rally, right? That's going to be important to know. What caused the rally mainly came out of tech. Now, if you looked at semiconductors, they were great well on the day too. So the 11 sectors that make up the SP 500, tech was one of the top performing. And then we go down to utilities. Utilities is more defensive. So why did tech run? It could be because it's pricing in the change in the meeting probabilities as far as the Fed rate curve. So you can see here, we're at 425 to 450 as it stands currently, but come February, the market is pricing in that 25 basis point hike. In March, they're pricing in another 25 basis point hike. And as you can see here, they plan on holding it to 475 to potentially 500 around that area. And as you can see, the big difference between today's screen and the other day's screen is now they're looking to rate cut here into November. That's what the market's pricing in. And then we added another rate cut there in December. So the market is looking to potentially the Fed cutting rates there towards the back half of 2023. That came out, right? And then tech started to kind of run up further. It started the day up high. So that could be what we're seeing now. That's kind of the opposite of what the Fed is telling us. So I feel like everyone's just kind of waiting for that pivot moment. Now, we do have Jerome Powell coming out tomorrow. That's going to be at 6 a.m., which is Pacific Standard Time. That's 30 minutes before the market opens. We have a couple other data points there too as well, but the big one that everyone's going to be watching is Fed Powell. So I looked into the options chain just to get an idea of, hey, what is the market pricing in as far as going into tomorrow's trading session? Well, going into tomorrow's trading session for SPX, we're looking at around a plus or minus $36 move. So the volatility is not, it's still decent volatility, but we've been seeing like 2 sigma moves. So I also wanted to point out January 13th, right? That's the end of the week. We're looking at about 93 vol. So after this trading session, we're still looking at plus or minus $93 move given the implied volatility in the options market. And start of the week, right, we had a $98 move. So a little bit of volatility came out so far, but we'll see if that changes greatly come tomorrow. Now, if I take a look at the expected moves of what's pricing in, we're looking at, actually I had the more specific levels here. You can screenshot. This is something that I shared on the other video. On the upper edge, I'm going to just call it 3995. And then on the lower edge, it's 399. I'm just going to call it 95 there too as well. Okay, you can screenshot and get more precise. We had that reversal type candle today, right? This is known as a inverted hammer or potentially shooting star, where we had a strong move up. We had a lot more FOMO chasing up the market, and then we reverted and closed pretty much at the low of the day. So not a good look overall, but there are some positive things still to note. We have this gap above us. We're still right below all these levels of resistance here. We have that MACD curling over. If I zoom in and look at this specific chart, this will highlight where the gap is on the SPY. And this anchored VWAP right here is the year-to-date anchored VWAP. So price is actually above. So the average buyer, based off of volume, right, and time, is in the green for this year. And you can see potentially could be a level where we can watch. Maybe it's bearish at the beginning. Maybe it comes back down here to this year-to-date anchored VWAP. So that could be one to pay attention to if we get some more bearish type price action coming into tomorrow's trading session. You can see this is the December anchored VWAP, which we could not close above. We got above it. We were trying to shoot for that gap, but we kind of reverted like I've already stated. If we take a look at the 15-minute time frame, this is where it could potentially still be somewhat bullish. We are above a 5-day moving average that is starting to turn up. Now, way back over here, right, and over here, we were talking about how it was declining, and what you wanted to see is it start to go to flat to neutral and then break above it and then potentially start turning back up. And that is what we're seeing. So yeah, today was a bearish type day where we gapped up, it looked great, and then completely reverted. However, if we start pulling back down a little bit further, where we come into the potential of the 5-day moving average, that's at 384 now, and it'll move up. And you will also see this year-to-date anchored view up potentially tick up here too a little bit. It's around 383.50, right around that level. That could present itself for an opportunity to bounce. Now, if we get a quick hit to the downside, you'll also have to pay attention to the RSI. The RSI is moving into that overextended territory at the downside. The PMO, price momentum oscillator, is also pointing straight down there too as well. So if it comes down into this area, RSI is potentially overbought. You want to see this start to curl back up. Maybe perhaps we come down and we do something like this, where it puts in a lower low, but yet, you know, RSI puts in a higher low, and also the PMO potentially too, creating a positive divergence where price really just pulls back into this trading range, boom, boom, and then we might see it potentially pop right back out. You know, it's a potential scenario. We got to write out and think of different scenarios that could happen come tomorrow. Now, I'm not going to be trading when the Fed starts talking. I know the market's going to act crazy, but I want to see how it digests the information, and then I want to go ahead and play kind of my attack. But I will be looking key at 386 as it comes into this area. Potentially this comes up. That would be a key level, just looking at this chart, how there's a lot of resistance. And then also, if it starts breaking down further, this volume shelf profile right in here at about, you know, between 380 and 382 will be a level of interest to pay attention to. If you take a look at the Qs, you know, we saw this positive divergence forming here on the RSI, saw it on the PMO. We talked about this wedge a while ago. It popped out. It's tried to come back. So if you just had a stop here, you had to wait multiple trading days, but it eventually popped to the upside. On a good note, we're back above that 5-day moving average, and it is inclining. So yeah, it was a strong move, and strong moves have been getting faded, right? So we're not seeing anything new here. So to see it come back down here, is this, you know, and back test this breakout and the 5-day moving average is still moving up, that's still a bullish sign. So in the short term, it's more leaning towards a bullish bias because of the inclining 5-day moving average and price being above there. But we still need to be patient for setups, right? This can come down here and it could stay down there and it could potentially flag. It could do that. And then it could break back down into this lower range down here too as well. Those are all possibilities, okay? If we continue on, the dollar did break down, and that could have helped perpetuate you know, a strong move in the overall markets today. However, you can see here, we still had the market reverse itself. So the dollar has now had 2 consecutive days to the downside, breaking down through this pattern. Perhaps maybe we get a little bit of a bid depending on what happens with Powell. If that is the case, I think we can obviously head lower there in the SP 500 as we've been seeing these negative correlations. If we take a look at the BPC-OMPQ, the NASDAQ bullish percent index is still pointing up. So this is a positive sign, right? We talked about it getting oversold, and we said that it rotates back into overbought conditions. So that is what it's currently doing as it stands now. So it's pointing straight up. You also got to look at BPINFO. This is the technology sector, and it's also pointing up, right? This is the technology sector. It was the top performing sector today. Wait, was it right? Yeah, technology was the top performing sector. Just had to double check. And it was in that oversold condition. So right now, all we're seeing is stocks that sold off. Go figure. Like we all look for narratives as to why prices are going up, but the reason why they're going up is because they sold off so darn hard. And now we're starting to see that take place, the bounce. Now, discretionary, and by the way, yeah, can it be a bottom? Perhaps, but also we're like 1 day, 2 day, 3 day, whatever, separated, right, from a move. So to call this the bottom would be just complete gambling. We don't know. There's still a lot of technical levels that price has to get up through to prove to us that, hey, a bottom, the bottom could be in. So as it stands right now, a bottom, maybe, right, as we're seeing the bounce. The bottom, no proof of that. Discretionary, right? Also a big sector to pay attention to, has been pointing straight up. It looks like it can easily move into that oversold condition, overbought condition here momentarily. BPSPX chart pointing straight up too as well, letting me think that, hey, we can move up higher back into that overbought condition there too as well. And we also had the summation index do the bullish crossover. We have positive breadth there in the Nasdaq McClellan oscillator. So as stated, yeah, price can potentially pull back, but remember, we have a lot of things pointing for a positive sign for the overall markets. And, the wrench that can get thrown in all of this is Jerome Powell coming in more hawkish than the market anticipates, right? The market will be anticipating a potential talk about a pivot sooner than later, right? And if that is the case and they come out dovish, right, and the market perceives that as bullish, we can see a monster rip in the markets. So be aware of that. Like, there's going to be a lot of volatility, a lot of movements. If we take a look at the zones, I'll share this once again. This is something that I share with my Patreon community. S&P 500 is still towards the upper end of its range. We have the 10-year yield and the dollar towards the low end. So if the 10-year yield, this is important to note, if we see a rapid rate of change, right, to the upside in the 10-year yield, that puts pressure on tech stocks. Guess what? If we get a bit massive rip in the dollar, that also puts pressure on various assets, including gold, precious metals, various other commodities, but also have we seen S&P 500 there too as well. And then as you can see, semiconductors did good today, but it is moving to that upper part of the range. It's been there now. We have, where else do we have? XLV, healthcare is towards the low end of the range. So this could be one to potentially look into if we have a defensive rotation, right? Utilities was up good on the day. Consumer staples was actually one of the lower performing sectors, if I remember correctly. Once again, yeah, consumer staples was towards the bottom and healthcare was too. So these two, if we get a more defensive rotation, I'd be paying attention to those because they could potentially present themselves as candidates to see stronger performance from a relative basis. All right, everybody, that's all I got for you on today's episode. Wanted to keep it a little bit shorter. Hope you all have a wonderful night.